The decentralized finance space, or DeFi, is constantly changing, and at the moment, its rate of evolution is faster than I've almost ever seen it. And I've seen it since its genesis. That was 8 to 10 years ago. So, what are we going to do? Well, we're going to sit down today on Crypto Clarified with Camila Russo, founder of the Defiant. She literally wrote the book about the early days of Ethereum. That's called The Infinite Machine, for those of you who love technology history. And you know, nobody loves history more than Benjamin C. Dean. I am Director of Digital Assets at Wisdom Tree, Crypto Clarified podcast. Welcome back. This is a really interesting discussion, and it's great to have Cami back. So here we go. US listeners, wisdomtreeprime.com, Apple, Android app stores. Hit subscribe and share the podcast on Spotify, YouTube, iTunes. Find purveyors of podcasts, and you can always find me spending too much time on the Bird app, X at Benjamin Dean. Before we begin, we have to do the most thrilling part of the episode, and that is the disclaimer. This is for you, Sam and James in compliance. I need to state the following. To clarify, the views and opinions expressed on this podcast are those of Wisdom Tree and the Defiant. They are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast research, nor as investment or tax advice. The information and opinions expressed in the podcast are not a recommendation, offer, or solicitation to buy or sell any securities. Reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. All right, on to the fun stuff. Let's go to Cami. Camila Russo is here again. Cami, welcome back.
Hi, Ben. Thank you for having me back.
It's always nice to have you here, especially someone so knowledgeable in the DeFi space. And there's been a lot happening in the DeFi space recently. There's a few different ways in which it's evolving. It's good to see the survival after crypto winter. And now it seems like the concepts that were put down, well, you wrote The Infinite Machine. Listeners, The Infinite Machine, that's the book. Cami wrote it. She's literally the author. It's been about 8 to 10 years since all of these concepts were put in place, and now they've evolved. I leave it to you as the expert. What do you think is interesting? What is on your radar at the moment in terms of the evolution of the DeFi space?
Well, I think just looking at this past few days, what's been really interesting is, to me at least, is this. There's been a debate happening within the Ethereum community on how useful DeFi actually is, and it was sparked by it was actually sparked by Kane Warwick, the founder of Synthetics and now Infinex, who he's a crypto and DeFi OG, and he went on a podcast and said that Vitalik and the Ethereum Foundation hate DeFi. And somebody, tweeted this out, and then Vitalik responded. And it was interesting that he didn't deny it. Like, he didn't say, no, like, I actually love DeFi. He was like, to me, the crypto applications that I like are the ones that are, one, permissionless, and two, sustainable. And he said, in DeFi, I use DEXs every week. I like Polymarket, this prediction market. And I like decentralized stablecoins like RAI. And then he said he kind of tolerates USDC because it's useful, but he was implying he doesn't love it. But he left out, in that very short list of things that he likes, he left out so much of DeFi. And then, somebody said, well, what about like earning yield on your assets?
Yes.
And he said, well, you know, as long as I know where the yield is coming from, and if that yield is coming from people borrowing crypto to then trade more crypto, that's an Ouroboros. And to be honest, I had to Google what that is. I didn't know. And it's a mythical creature. It's a snake that eats its own tail.
The
So
Ouroboros. The
yes,
Ouroboros is the snake that eats its own tail.
yes.
Yes.
So that was, he's implying
Greek
obviously that
mythology. Listen,
Greek
sorry,
Greek
Cami.
mythology.
Greek
I
mythology.
did not know that.
I love that you brought up Greek mythology, Cami.
That was
I don't mean
Vitalik.
to
That was
interrupt you though.
Vitalik. Don't credit me for that.
Fantastic. Sorry,
Yeah,
I don't
yes.
mean to
It's okay.
force you.
So, yeah, like Vitalik has a very fancy way of saying DeFi is a Ponzi scheme or something, or
Yep.
DeFi is not sustainable. DeFi is
Yep.
kind of this circular economy. Um, and I had a chat with Stani yesterday. He's
Oh,
the founder of
nice.
Aave,
Yes.
and Aave is the biggest DeFi lending platform. So Vitalik is kind of directly criticizing or saying that lending in DeFi is not sustainable. So obviously this sparked a lot of discussion in Ethereum circles and DeFi founders. Um, and this comes at a time when the Ethereum community is already very sensitive because Ethereum has underperformed all major crypto assets this year.
Mm-hmm.
In a context where layer twos have become super successful, layer twos
Yeah.
assets and transactions and activity has just blown up, and Ethereum isn't necessarily seeing all that value reflected in ETH, the asset. So, there's this argument to be made that layer twos are becoming kind of parasitic to the Ethereum layer one. So that's another like separate theme. But anyways, like, so the
Mm-hmm.
Ethereum community is like super sensitive, and then like Vitalik comes and says, this like the main use case on Ethereum is unsustainable, and goes out and kind of
Huh.
criticizes it. So, I mean, I'm interested to know also what I have my own opinions on what he said, but what do you think? I mean, do you believe that DeFi is unsustainable, and he was also saying like we should. There's so many non-financial use cases that can be done on Ethereum and blockchains. Like we should be giving those more support. Like kind of saying like finance has been like overrepresented. That was part of his argument as well. What do you think?
Well, in the past, we've talked about the musical chairs game, which was
Mm-hmm.
DeFi Summer, which is issue tokens, incentivize people to deposit liquidity, receive token in kind, and then what is token worth, right?
Mm-hmm.
So we've talked about that before in past episodes of this podcast. Um, that's not a sustainable model. The thesis I've had for a number of years is that economically productive activity has to happen, and using this new digital infrastructure. Um,
Mm-hmm.
Now, we're starting to see that behavior occur. Now, of course, it's tied back to fiat system, which is problematic in many parts of the world. But if economically productive activity is facilitated by digital infrastructure, in this case, blockchains, Ethereum, Bitcoin, good. But if it's just a game of musical chairs, you could also use the metaphor moving deck chairs around the Titanic, bad. So here is the bridge between the ideas. I'm watching a lot of what they call real world assets
Mm-hmm.
migrating on chain, which is simply to say people do economic activity facilitated by distributed networks you end up with stable coins or tokenized T-bills or money market funds or gold or whatever, right? Have you seen evolution in that portion of the market? Because while I'll until I'm like blue in the face, I'll criticize how poorly managed some fiat currencies are managed.
Mm-hmm.
That idea that we're using digital infrastructure like the Ethereum network in order to facilitate productive economic activity
Mm-hmm.
is something I'm seeing. But I'm interested in what you think because you're so close to the matter and an expert in the space.
So there's definitely been progress in real world assets. So I was just pulling up the rwa.xyz site, which kind of aggregates this data.
Yeah.
And you can see the like a really nice kind of curve up in the chart, where total real world assets on chain are now, they just surpassed, what is it, 10 billion.
It's about 2.3 billion, I think, in T-bills and money market funds, and it's
Yeah.
156 in stable coins. And then there's the other asset classes from
Well, yeah,
memory.
not counting stable coins. Yeah, if you count
Okay.
I mean, stable coins is just like such a huge number. So yeah, like
Yeah.
the
Yeah.
stablecoin market cap, yeah, it's like, yeah, over 100 billion. But just like non-stablecoin real world assets are over 10 billion. And
Mm-hmm.
you have here like 8 billion of that is private credit.
Uh-huh.
So markets like centrifuge, I believe. and
Okay.
then the rest is basically T-bills, US treasuries. There's very little of like commodities, corporate bonds, stocks. So yeah, there's definitely progress, and this is, 10 billion is up from basically, zero like 2 years ago,
Yeah.
right?
That's not a bad annual growth rate, is it?
Yeah,
Like,
yeah,
anyway.
yeah. So yeah, you are seeing non-crypto. I hate the term real world assets, to be honest.
So do
Like,
I. And I don't mean to interrupt you,
yeah,
but
no,
I
no,
also
no.
hate tokenization. But yeah, I won't step on your words because
No,
you're
no,
expert.
no. Like real world asset, like crypto is also in the real world. you know?
Yeah, it's not in an alternate dimension.
Yeah, like crypto is also real, but I guess like I would like to call them non-blockchain based or non-crypto, um, like, or tokenized assets or something. I don't know,
Yeah.
but yeah, real world assets. I've always found that to be strange. But in any case, you are seeing more and more of non-blockchain securities and assets being tokenized and brought on chain. So you're seeing um, U.S. Treasuries, stocks, loans that are being tokenized. And that's super interesting. That's real kind of economic activity that's being represented on chain. And then, that means that more people globally can access it and it can become composable and used inside of DeFi. And, it unlocks all these possibilities that happen when things are on chain. So that's great. And that's, that definitely increases sustainability of blockchains. But and it's just like surprising to me that Vitalik, of all people, would kind of make this argument that DeFi yield isn't sustainable, because I think there I think there needs to be kind of a differentiation between airdrop yield and like yield farming yield, which is absolutely unsustainable. Like yield that comes from projects just like minting assets or like minting tokens out of thin air, absolutely unsustainable. um but when it comes to the majority of lending in crypto, which is, you know, borrowers of crypto paying borrowing fees, and then lenders getting part of those fees. To me, that's, you know, that's a very kind of crypto native economy that's completely valid. You know, like people are, maybe I have a bunch of ETH and I don't want to sell it. So I put that ETH as collateral and take out stable coins to pay my credit card debt. And this is something that I've actually done. So,
So have
you know,
I
yeah.
get that.
So, you know, this is something that people are actually doing. They're taking out stable coins, transferring them to a centralized exchange like Coinbase, cashing it out for real dollars, and you know, paying for stuff.
Yeah.
This is something that's happening. And then lenders on the other side are getting yield from that. That's crypto native activity. Why does that have to be unsustainable? You know, it's like you're buying other, you're buying crypto. It's an asset class. Um, you know, like you believe this is something that will give you some future return, so you're, you know, you want to buy more of it, and you're taking out money. You know, it's like, it's what finance is supposed to do, right? It's unlocking capital. It's like making capital more efficient. It's, you know,
Yeah.
so it in a very crypto native way. So yeah, I absolutely like, it's it's very strange to disagree with like a genius, um and to have like arguments against his arguments. But yeah, like I have to disagree with Vitalik here.
It's
DeFi
fine.
is absolutely uh useful, and I think, you know, like it's the use case that has found a product market fit on Ethereum. And it's a huge thing. Like right now on Ethereum, there is this financial system that's crypto native and that works, and that is based on smart contracts, that is enabling payments, trading,
Yep.
transfers, lending and borrowing. All of this is happening on chain on Ethereum. Vitalik should be like thrilled. Like he should be advocating for DeFi, like shouting it from the rooftops. Like his platform is creating an alternative financial system. That's what crypto was meant to do.
Yeah.
And you know, like it's there, it works when CeFi is going down and like bankrupt, and when, you know,
Insolvent.
fintech insolvent, when fintech kind of goes down, when there's high volatility, DeFi just works. Like people are
Right.
able to keep trading, all of the protocols keep working. You know, it's just like gone through so many uh, tests and has worked through all of that. So I don't know, at this point I'm really confident in this alternate financial system, this crypto based financial system that is working, but it's very emerging. And I think it needs support from people like Vitalik at this point. You know, it's like it's not the time to say like, okay, we're done with DeFi, like let's just focus on other use cases, you know? I don't know. I was just so surprised to see that.
It's at some point, if it's decentralized system, at some point it shouldn't matter what Vitalik says.
Absolutely.
Which is, and I know you know that, but
Mm.
the other one that's interesting is that, well, if the interest rates are going down, look, people are free to interact with one another in a commercial manner and determine the interest rate at which they're willing to pay, given whatever they want to do with lending, right? So it's
Mhm.
market driven. And at some point, like, it doesn't really matter what he thinks.
Oh yeah.
The technology's out there, and there's hundreds of developers who are working on it, and then there's thousands of people working around companies that utilize the infrastructure, Ethereum network, in order to deliver things that people are willing and able to pay for. that's a market economy. That's capitalism. That's just how it works, right? I know you know, but it is interesting to watch that process play out, and with all its paradoxes and contradictions as it goes along. So, there it is. I do want to ask you a question because MakerDAO is one of these bridges now between the traditional, well, it's becoming it. So DeFi, DAI, stablecoin, over collateralized, and then Spark DAO, and then Grand Prix. Now, I'm interested in your view on this because I monitor it closely. The Steakhouse financial people are very interesting and smart people. But there seems to be a continuing merging of this, what used to be, we would just call DeFi space, with traditional financial system or systems. Have you been monitoring what they've been up to? And what are your thoughts? I'd just be interested to know what you think, because you're very knowledgeable about this.
So, Maker was the original DeFi dApp. I think probably the first DeFi protocol. And they started by issuing DAI, which used to be a fully decentralized stablecoin. DAI used to be fully backed by ETH. But then they discovered that limited their DAI's ability to scale and grow in market cap, because there can only be so much ETH locked up in order to issue DAI. And so they started adding other assets to scale it, including other stablecoins like USDC. And so, since they started doing that, there's been this kind of debate on how useful DAI, or like what DAI's place is, because now it's not a fully decentralized and censorless stablecoin anymore, because it's backed by USDC, which can be censored. So it's like if 30% of DAI is backed by USDC, and say USDC loses its peg because, like it happened, their fiat locked in a bank is seized or whatever, then DAI is not censorless either. Like it can be indirectly censored through these fiat backed stablecoins and so on. And they also have they've added other real world assets to its collateral, as well as it has as it tries to scale and keep up with USDC and USDT, which are the biggest stablecoins out there. And so I've interviewed Rune and talked to him many times about this, and he is has been very uncomfortable in this position of wanting MakerDAO to reach its like full potential, and for the MakerDAO stablecoin to grow, but at the same time having these like more cypherpunk, like crypto purist views, and trying to reconcile those two things in Maker. And the other thing that's been hard is just as Maker has become this very large organization, it's been very hard to manage. And so it's become very inefficient and bloated. And so we came up with this transition and roadmap that he calls the endgame plan. And so this week they announced a rebrand in line with this endgame plan. So MakerDAO will now be called Sky. But that's kind of the least important of it. So the most interesting part is that in this endgame plan, there will now be two stable coins. One will be which they just announced the name USDS for like, I guess, Sky. And that will be like, just like fully scalable just meant to compete with USDT and USDC and be backed by real world assets and fiat and other stable coins. And you know Rune really wants the MakerDAO stablecoin to become to reach just full mainstream adoption, um, and and do it through Spark and through these like MakerDAO related lending apps and like financial applications. And then there will be a second stablecoin that will be kind of like the original DAI, that will be fully decentralized, and only backed by ETH and like maybe other just like crypto native assets. So they don't have so it won't be just like one stablecoin trying to achieve opposing goals anymore. There will be two stablecoins under MakerDAO. And then the other part of this endgame plan is that instead of managing all of Maker activity in one DAO, there will now be sub DAOs, which like very Maker. They keep like changing their names. So they used to be called sub DAOs, and now with the Sky rebrand, they're called something else, which I'm not remembering right now, but it's like something related to Sky.
Okay. Stars or
Stars.
constellation, probably.
Yeah, I think it's stars.
They're probably
actually.
It's stars, I think.
Yeah.
I might be wrong. So
yeah, but in any case, so there will be like these sub DAOs that will manage other activities of MakerDAO. Like one of these sub DAOs is actually Spark, I believe. I think that's the first one.
That's one of them.
These sub DAOs will then have their own tokens, and just like they'll have their own management that's like specific to them. So it just like becomes easier for the entire MakerDAO galaxy, now that we're kind of in the astrological theme.
Constellations, Taurus,
yes.
Gemini. I'm Gemini, yeah. So
okay.
I opened that up.
So yeah, that's the plan. It's like a bit complicated and hugely ambitious. We'll see how it goes.
I'm listening to you as I look up the market cap of DAI. The market cap is $5.35 billion. So, for the listeners, for all those people who have sat there for years saying, oh, crypto thing, like it'll never take off. DAI, which we're talking about, DAI, it's a stable coin that's over collateralized. It's run by this MakerDAO organization that's now expanding and diversifying. $5.3 billion is the assets under management. It's not a small deal. Like, another way to put it is, like, that's a big deal.
Yeah.
And as we were talking about earlier, Cami, like a few years ago, let's say 5 to 7, it was 0.
Yeah.
So if you think about how do you build a company, where in this case it's more like assets under management, it's not market capitalization, but people confuse them. Fine. How do you build something that's $5.3 billion in assets under management within 5 years? Well, you do this. And it's evolving. So but it's not small or niche anymore. It's completely different. And Cami, I'm not saying it to you, I'm saying it more for the listeners, because you literally wrote the book on it. So
well, on Ethereum, but yeah,
but you follow it and your team does. So it's definitely not telling you. You tell me. I know we're coming up on time, and I know that you come and join us frequently now, which is great.
Yeah, I'm happy to.
Well, it's a pleasure to have you here. Now, we usually finish episodes with thinking a little bit about the future. You and I can share some thoughts because you're really close to the matter. I sit around late at night, like thinking, and trying to come up with good. So, what
Watching
have you got?
CoinGecko trading.
So, what are you currently? What is something interesting to you? And I know that you were in Buenos Aires recently, and you saw Manu.
Hmm.
Listeners, there's an episode with Manuel Bourtois. I posted on Twitter again the other day because it's one of my favorite conversations in the last year. But I know that you've been traveling around meeting interesting, smart people. And if you've got, it could be one or two thoughts, what's got your attention, that would be helpful. And then maybe I've got something less interesting to say.
um, yeah, I think yeah, I'll take this opportunity to talk about Crecimiento, which means growth in Spanish, and that's something that I'm definitely watching. It's this movement in Argentina that it has the goal to make Buenos Aires a global crypto hub, and I think it's such a compelling vision because Argentina has so much going for it to be that hub. You know, it already has an amazing crypto ecosystem and community. Like so many great founders come from there, and there's like really good developer and design and just like talent in Argentina. And at the same time, crypto is already mainstream there. It's very like interesting to see just like everyday people actually use crypto, like in apps like Bello of Manu and Lemon. Uh, and when I was there, I interviewed uh, both of those founders of these
Right.
wallets.
Good.
They have millions of users. So Lemon has 2.5 million users, and Velo has like 1 point something. So it's, you know,
It's not small.
like you were saying, it's not small. Like it's like these things are being used every day by people in Argentina to pay for things. So, you know, they get their salaries in these apps, and then they trade some of their pesos for stable coins,
Hmm.
which, you know, huge use case in Argentina, obviously, with inflation and currency controls and so on. There's no access to hard currency. So to be able to access a dollar like instrument, and save and get some interest on those savings, it's huge. So, you know, in Argentina, there's this already population that uses crypto that gets it, and there's this talent pool. And, you know, what this Crecimiento movement wants to leverage now is that there's this new government with Javier Milei, who is a you know, like famous libertarian, and he hasn't said anything about crypto, but people kind of assume that he will be pro crypto because he's like all like for free markets and so on. Um, so, you know, they are inviting regulators and lawmakers and government officials into this. Like they had a month long pop-up city in Buenos Aires called Aleph, where they had like events every single day, panels. They had a co-working space, and it's being sponsored by I don't know, like a handful of big crypto companies like CK Sync, um, Polygon, Solana. I think also sponsored it, and a few others. And the idea is that, you know, they'll have this co-working space running for like 3 years, and they want to do like protocol labs. I shouldn't forget about that. I think they're probably the biggest sponsor, protocol labs.
Okay.
And Juan Benet is just like, he was there, and like he was like pushing for this pop-up city to then become like a sandbox, like an economic sandbox, and then like a full-fledged special economic zone for crypto. So that
Oh,
this is something to watch. Like all of these founders and companies and community, and like it does have support from like key government officials. There was the president of the CNV, which is like the Argentine SEC, was there. So,
yep.
you know, it's like it has like actual official support. So like all of these things are happening where we might get like a very, hopefully like a very crypto friendly jurisdiction in the West, in an amazing city. Like I'm sure so many crypto founders and projects would love to move down there, or I recommend it.
Cami, I was there twice last year, and don't tempt me.
Buenos Aires, I mean, yeah, like same. I was so tempted to just stay there. It's the best city in Latin America.
Buenos Aires.
And this is coming from a Chilean, so
yeah, yes. Santiago, Chile is also cool, but
Buenos Aires is something else. So,
good.
Anyways, something to watch.
So you've seen the same thing, because I went twice last year, and I saw the same thing you've seen.
Yeah.
And
yeah, it's remarkable.
It's evolving, of course, changing over time, but like, yeah, like we can see it happening in many parts of the world. We don't have time for me to blab on about US electoral politics and presidential candidates saying, have fun with your Bitcoins and your crypto. And so we don't have time to talk about that. But there is something happening. And, it's a bit ironic. Maybe we talk about it next time you're on the podcast, which is this irony between decentralized technology, no central actor, people run network, people do things, and then a government centralized entity starts trying to influence things, but maybe for the better or worse. So maybe we talk about that next time when you're on.
Sure.
But it's super interesting, and you've seen the same thing I have, so that's cool. We are on time though, Cami, so I thank you for your time.
Of course.
It's always nice speaking with you. Of course, I wish you well, and we will speak again on podcast very soon.
Sounds good. Thanks so much.
Thank you. Thanks to you. There you go, folks. Camila Russo joining us once again, founder of the Defiant. Go check the website out. They have excellent DeFi information, and you've just heard it straight from the expert. US listeners, wisdomtreeprime.com, Apple, Android app stores. You can find me spending too much time on the Bird app, X, at Benjamin Dean. It's always nice having you here with us, and I look forward to having you again shortly.